You're listening to the Scotiabank Market Points podcast. I'm your host, Greg White. Market Points is part of the Knowledge Capital series, a collection of audio, video, and written commentary from Scotiabank global banking and markets leaders designed to provide you with timely insights and analysis. The Pacific Alliance, the Latin American trade bloc of Chile, Peru, Colombia, and Mexico, has its sights set on growth. But each country has its own idiosyncrasies that investors need to consider. 2021 is particularly unique as the countries are coming out of a global crisis while facing elections, rewriting constitutions, and managing their fiscal and monetary strategies. On this episode of Market Points, we're joined by Tania Escobedo, Latam Macro Strategist at Scotiabank, and explore the investor's approach to policy and politics in the Pacific Alliance. Hi, Tania. Welcome to the podcast.
Thank you very much, Greg, for having me. It's my pleasure.
So in early December, you had published a rather favorable outlook for emerging markets going forward. Do you still hold that opinion?
Yes, we do. I still think that 2021 is going to be better in terms of risk appetite in general relative to what we saw in 2020. One of the key developments will, of course, be the deployment of the immunization strategies, the availability of the vaccine that might give investors more visibility and more certainty about the normalization in the global growth. And I think that that will be key for investors to put a little bit more risk into their portfolios with a more medium to long-term view rather than just playing relative value strategies and working with very light volumes as we have seen so far. I also think that the conditions are there. I mean, liquidity is at all-time highs, and we know that monetary policy and fiscal policies around the world are going to remain very expansive, at least in the next couple of years. And I think that that would, set the stage for a better performance of emerging market assets, and in particular, Latin American assets.
Well, on that note, let's dive into the Pacific Alliance, and starting with Mexico. Again, late last year, you had thought that perhaps investors were being overly pessimistic on Mexico, and that may give way to some opportunities. Are you still seeing that take shape?
Yes, and I think that some of those expectations have been materializing. I mean, Mexico ended 2020 in a relatively better shape than what we were expecting at the beginning of the crisis. In the summer, consensus was of about a 9.5% fall in GDP for 2020 in Mexico. It ended up being about 8.3%, and we have also seen some positive revisions to growth forecasts for 2021. They are mainly driven by better perspectives in the U.S. growth. We know that Mexico and the United States are very, very closely interconnected, and more growth in the U.S. will mean a better performance of the exporting sector in Mexico, manufacturing sector. And I think that the key here is going to be private investment in Mexico. We know that probably some of the policies that we have seen lately have been driving a fall in business confidence. And I think that that will be key for the path of growth in Mexico in the medium term. We do have to see a better relationship between the administration and the private sector in order for capex to increase. And we will keep an eye on that because we do see favorable conditions coming from the external sector. And we also think that there have been relatively positive surprises in the local consumption, given better statistics in the labor markets. It was hit hard, but it was not hit as hard as we thought it would be back in the summer. And we also had positive surprises, for example, in remittances, which hit all-time highs in 2020, and that put a floor in domestic consumption that we think that will be positive in 2021 as well. So we will keep an eye on local investment, and we still have a prospect of around 3.5% of growth for 2021, but we do think that there are some upside surprises for that number.
Is there still a risk on the outlook for Mexico's debt rating?
That is a topic that is on the mind of every investor that wants to put money into Mexican assets. Our base case scenario here at Scotia is that Mexico will hold on to its investment grade. We don't think that it's going to lose investment grade in 2021 or 2022. The debt metrics have been relatively favorable, and Of course, given that the government didn't deploy a strong fiscal response to the crisis, Mexico is starting 2021 in a much less vulnerable position from the perspective of the fiscal accounts of the government. And I think that that would be a positive when investors go and cherry pick their assets for incorporating or reincorporating risk into their portfolios. Um, Pemex will, of course, be one important thing to look at. We don't think that 2021 is going to be the year where Pemex is going to, collapse in a way that there's a credit event. We actually think that it's going to be the same story, probably a weak finances, but the government is going to be able to put some patches to remain in the path that we've been seeing so far. So even if Pemex continues to be a relatively weak name in terms of credit, we don't think that that's going to have important repercussions in the sovereign rating. And given that the government has made a very strong commitment to fiscal responsibility, we do think that even with the 3.5% of growth that we're expecting for 2021, the Ministry of Finance is going to be able to deliver on their fiscal balances, objectives, and goals for the next couple of years.
What about the sovereign rating in Colombia? There was an expected downgrade in general there and some concerns around uncertainty in fiscal reform, but you had thought that some of that was priced in. Can you expand on that?
Yes, I do think that Colombia is relative to Mexico, for example, in a little bit of a more urgent situation to tackle the fiscal balances. They did start from a weaker point when they started to deploy the fiscal response to offset the negative effects of the COVID crisis. And they do need to deliver a very aggressive tax reform, a very aggressive increase in revenues in about 2 percentage points of the GDP, which is a very big fiscal reform that we're talking about. If we take into account that the average size of a typical tax reform in the country has been of about 0.6% of GDP. They would have to increase the VAT, for example, in a significant amount to increase the tax collection as much as they need to. And of course, in a position where you are just getting out of a very deep recession where the labor market has been hit very hard. And we know in Colombia, as in other emerging market economies, the COVID crisis ended up in a situation where economic inequalities widened significantly. I think that it's going to be a tough sell for the government to increase the tax base as much as they need to in order to preserve their investment grade. Two of the main rating agencies have Colombia already just one notch above high yield, and I do think that given the socioeconomic situation at this point, and given that we also have elections coming in 2022, it's going to be difficult for the government to negotiate with Congress a strong tax reform. So I'm not saying that it's a done deal that Colombia is going to lose investment grade in 2021, but I would say that probabilities are biased towards um, that scenario, and that might put a lid on the appetite from investors to add duration in Colombia, just because we do not have enough visibility so far to kind of see if they're going to be able to preserve the investment grade.
Are you concerned about inflation in Colombia then?
Not really. I think that we have seen, I mean, inflation in Colombia is around 1.6% in January. It's a very low print, close to historical lows. What we do think is that it's going to be rebounding. A lot of the downside pressures to inflation have to do right now with, subsidies that the government put in place to tackle the COVID crisis. A lot of the services, that the service sector was hit the hardest in this pandemic, and some of the education fees, the tourism, everything, all of those prices collapsed, and they're explaining part of the low prints that we're looking at right now. But starting from April, we are anticipating that we will see a rebound in inflation, that it's going to take it relatively fast to the 3% that is the target of the central bank. And even though we are not expecting any kind of overshot in inflation, we do think that it's going to be the path of inflation is going to be such that the central bank is not going to continue to cut rates. We think that the reference rate is going to stay at 1.75 at least until the third quarter of 2021. And probably there we're going to start seeing some discussion about starting a hiking cycle. But yes, the path of inflation we think is definitely to the upside in the coming months. Nothing to be concerned about, but it won't give the central bank arguments to cut again. It for us it's going to be a stable rate up until the last part of 2021.
A big question on the minds of investors looking at Peru is what will be the results of this election. How are you assessing the risks of the various potential outcomes?
Yeah, in Peru, I think that when you get into Peruvian risk, it's always a combo that comes with political noise, right? I think that investors are very used to political noise in Peru, and they kind of drive through it relatively well at this point. What I think is important is that after the huge fiscal response that we saw in Peru in 2020, the government has less buffers um, to kind of face any kind of new eventuality, right? So all of the very solid starting point that we had in 2019 and 2020 is no longer there. So from now on, I think that the people in government, the personalities in government are going to be key to reassess the plan to go back to the path of fiscal sustainability. The Congress is going to be a huge player in this. We know that Congress in 2020 and so far in 2021 has been very creative in the bills that they put forward, that are not very much in line with the fiscal orthodoxy that we used to see. If there is a Congress after the election that has this more kind of populist approach to law making, that's going to be a problem, and I think that that's one of the main risks. And of course, if we get a president that's more biased towards increasing spending, that's also going to be a net negative, I think, for the projections that we have for the fiscal balances in Peru going forward. For now, I think that there is no plan to kind of reform the fiscal framework. There's no tax reform in sight for at least this year and next. So whoever is in power in 2022, in 2023, is going to have to deal with all of these. Um, Government spending is going to have to be cut, and we will have to have a better base for tax collection. So those are the things that are at risk for the coming years. I think that the markets are going to be very, very much um, attentive to who wins the election, the profile of this new president, and above all, the composition of Congress, because that's where we are seeing right now the highest risk of bills that might potentially affect the fiscal balances going forward.
You were expecting 2021 to be a relatively large year for new issuance of Peruvian sovereign debt. Will that remain the same regardless of election outcome?
Yes, so far, yes. I mean, they have very specific financing needs, and given as we were saying before, given that they are almost done with the sovereign wealth funds, they don't have much resources left there. A lot of the financing needs are going to have to be met with the issuance of new debt. We are anticipating about 35 billion Peruvian soles in issuance for this year, for 2021. We do think that they will kind of play a little bit with some global issuances as well. But in the end, we think that they will prioritize the issuance in Peruvian soles. So that's something that has to be met, even if a very orthodox government wins the election in April. In any case, or if anything, I think the risk might be biased towards a higher financing needs. If there's kind of a more left wing government coming in 2021, probably we will see a little bit more spending in the agenda, and that would have to be met with even more issuance from the Peruvian government.
A lot of considerable political action also happening in Chile this year. How do you expect that to affect its fiscal and monetary picture?
Yes, Chile is going to go through a very long and very interesting process of writing their new constitution. We have the elections for the new constitution assembly in April, and of course, the composition of that constitutional assembly is going to be key to reassess the prospect of what could be discussed or what new proposals could be included in the new constitution. For now, we think that anything that resembles the constitution of the current Congress would be well taken by the markets, just because it diminishes or decreases the risk of any kind of extreme proposal making their way into the new constitution. But in any case, I think that the market at this point is pricing a relatively smooth process that will not result in big changes. For us here at Scotia, even though we kind of agree with that general view, we do think that the new constitution is going to end up validating a more expensive government. We know that Chile has always been a very pro-market policies, and that might, reverse a little bit with the new constitution. Probably the government is going to have to be much more active in issues where they are hands off at the moment. I'm talking about pensions, education, the distribution of some services, utilities, etc. So in any event, I do think that structurally the new constitution is going to mean more spending for Chile, and probably a structurally higher level of financing needs for the country, which would mean also a higher supply of local bonds for the coming years. And I would keep an eye on two very specific points that I think that are very important when the discussions of how the new constitution will look like. The first one is, of course, the autonomy of the central bank. At the moment, we think that it will remain untouched, but anything that messes up with the idea of independence and autonomy of the central bank will be very relevant for the markets. And the other thing is the fiscal rule. We think that the best case scenario should leave most of the responsibility on spending size and allocation to the executive. If that changes, that could also mean a very important, structural change in how things are done fiscally in Chile. In terms of the short-term implications for monetary policy, I don't think that we will see much happening in 2021. This is more of a long-term event. So in 2021, we're still very comfortable thinking that the central bank will keep the rate unchanged at 0.5% for the rest of the year, and probably well into 2022, where we might see some discussions of a hike probably in the first quarter.
That was Tania Escobedo, Latam Macro Strategist at Scotiabank. You can now find Scotiabank's Market Points on Apple Podcasts, Google Podcasts, and Spotify. Don't miss an episode. Subscribe on your favorite podcast platform. And we want to hear from you. Please rate and review the show. Your feedback helps us improve the content we create for you. You'll find more thought-leading content on our website, gbm.scotiabank.com. And you can also follow us on Twitter at ScotiabankGBM, as well as our LinkedIn showcase page under Scotiabank Global Banking and Markets. Please refer to our legal disclosures on our website. I'm Greg White. Thanks for listening.